Hello students, today we are going to start with set off and carry forward of losses. This is chapter 6 in the study material. If you do not have a physical copy of the study material, don't worry, you can download this chapter from the ICI's website. Okay, if you don't know how to download, don't worry, the link for this PDF is given in the description below. The notes that you are seeing right now on your screens are available in the Telegram group. The link for the Telegram group is given in the description below. So kindly download this note from the Telegram group. Okay, basically we need to understand what is this chapter all about. Okay, so this chapter is about losses, whether the losses can be set off, or if the losses can't be set off, whether the losses can be carried forward or not. Okay, I hope this is quite clear. So before understanding the main crux of this chapter, I just want to give you a layman example so that you can understand the flow of this chapter. So let me take a new page. Okay, so here we'll take an example of Mr. Shyam. Okay, Mr. Shyam has this following sources of income. Okay, that is, first is salary, second is house property, third is business, fourth is capital gains slash losses. Okay, fifth, income from other sources. IFOS means income from other sources. So basically from salary head he earns an income of rupees 4 lakh per annum. This is computed. Okay, from house property he has incurred a loss of say rupees 5 lakhs. So this is loss. Okay, from business he has earned an income of say rupees 3 lakhs. Okay, this is profit. From this head he has earned a capital gain of rupees 1 lakh. Okay, so this is basically capital gains. From income from other source head he has earned an income of rupees 2 lakhs. Okay, so if you can see the example, you can see that Mr. Shyam has incurred a loss of rupees 5 lakhs. Okay, and he has earned a salary income of rupees 4 lakh. From business he has earned a profit of 3 lakhs. From this head he has earned a capital gain of rupees 1 lakh. From income from other sources he has earned a income of rupees 2 lakhs. Okay, so our concern is, can this loss be set off against this heads? That means salary, business, capital gain, income from other sources. The answer is yes. So how we can set it off? That's what is given here in the notes. Okay, so we need to understand the notes, then we'll come back to our example over here. That time you will understand how to do that. Okay, so we'll keep the example as it is and we'll come back to our notes. We'll understand the provisions first of this chapter. Firstly, I want to tell you all, in this chapter, set off and carry forward, you don't need to remember any section. So just don't take any tension of learning the sections. If you see the study material, okay, there are sections given, section 70, section 71. Okay, so we don't need to memorize it because the table itself is the product of the sections, all the sections that are given in the chapter. Okay, if you remember this particular table, that is sufficiently enough for your exams. In exams you don't need to write any sections, or any standalone questions will not come regarding this particular section, like how to set it off or something like that. Okay, so don't worry. Basically we'll start with how to interpret this table. So the first column is the losses under the head. Okay, so losses under the head and losses from certain income. Certain income is for income from other sources, which is a rare possibility at IPC level that a loss they will give under the head of income from other sources. Okay, current year can be adjusted against. What does this means? Just be patient, we'll read it off, and then when I'll be explaining you, that time I'll show you how to interpret this also. Subsequent year can be adjusted against number of year return file up to due date. Okay, so first loss is loss under the head of salary. So just imagine whether any SSC can incur any loss from salary. The answer whatever you should give is no, because from the head of salary no SSC can earn a loss. I hope this is quite clear to you all. Okay, an SSC possibly can earn no income from salary, but earning a loss is not possible. I hope this is quite clear. So you all might be thinking that if a particular assessee is working in a company and he has been penalized, okay, and he need to compensate for that losses, so that can be considered as a loss under the head of salary. So that is considered as penalty incurred by a particular assessee. That is not a loss, okay. So basically from the head income from salary, losses from salary are not possible. So that's what I have written: loss not possible, loss not possible, NA, loss not possible. So basically we didn't came to know what all this are about, but don't worry, we'll come to know here, okay. So if any assessee has incurred a loss from house property, just like our example of Mr. Sham, where from house property he has incurred a 5 lakh of loss, so that is an appropriate example to explain you all, okay. So if a loss has been incurred from a house property, that loss can be set off in the previous year, that means 1920, in the previous year 1920, that is assessment year 2020-21, okay, against any income. That means against income from salary, against income from business, against income from capital gain, against income from other sources. I hope this is clear. But I have written something in red, that is a condition given from our example. We'll take Sham. Sham has incurred a loss from the house property of rupees 5 lakh. So how that 5 lakh can be adjusted against other heads of income? Other heads of income means salary, business, capital gain, income from other sources. I hope this is quite clear. So coming back to our notes, okay, so we need to understand what that condition is about. So it says that first set off the loss, first set off the house property loss up to 2 lakhs from other head. So what it is saying is, first set off the loss up to rupees 2 lakh from other head, then balance here. Then balance here, what does this means? Okay, so let's come back to our example and modify our example. So this is house property 1, okay, and now let's take one more house property, say house property 2. Here he has earned an income of 2 lakhs, okay, he has earned a rent income of 2 lakhs. So now our example is competent enough to make you all understand this particular thing written in red. I hope this is quite clear. So let's read it again, okay. Loss from house property can be set off against any income. First set off the losses up to 2 lakh from other head, then balance here. So basically what does this mean is, see, we'll write all the heads of income. Income from salary, okay, income from house property. Is there an income from house property? Yes, there is an income from house property. Then third, income from other sources. Is there an income from other sources? Yes. Fourth, income from capital gain. Is there an income from capital gain? Yes. Then fifth, we'll write income from PGPP, that is business and profession. I hope this is quite clear. So income from salary is rupees 4 lakhs. We'll feed the figures. Income from house property is 2 lakhs. We'll straight away feed this 2 lakhs, okay. Then income from other sources is also 2 lakhs. Income from capital gain is 1 lakh. Income from PGPP is 3 lakh. I hope this is quite clear. So there is a loss of rupees 5 lakhs. So we'll write here as a working note, loss of rupees 5 lakhs, okay. So out of this 5 lakh, this loss is specifically incurred in the previous year 1920, okay. I hope this is quite clear. So this loss will be divided into two parts, that is 2 lakhs and the balance part, that is 3 lakhs. So let's come back to our notes and read it, okay. Losses from house property can be set off against any income. First set of loss up to 2 lakh from other head. So that means this first 2 lakhs bifurcation, we have to set it off against any income. Any income means income from salary, income from other sources, income from capital gain, and income from business. I hope this is quite clear. So this 2 lakh can be entirely set off against salary, or it can be entirely set off against income from other sources. But if this two income from salary and income from other sources would have not been there, then it could have been set off of 1 lakh from income from capital gain and balance of 1 lakh from income from business. I hope this is quite clear to you all, okay. I hope you all are understanding how to set it off, okay. So let's erase it. You can see it that this 2 lakh can be entirely set off against income from salary. So we'll simply set that 2 lakh out of the income of salary. this loss of house property will reduce. Less loss from house property 1. Okay, so maximum 2 lakh we have reduced. So the balance income from salary is rupees 2 lakhs. I hope this is quite clear. So let's come back to the notes. So we have completed this part. Okay, loss from house property set off against any income. First set off loss up to 2 lakh from other head. So this first 2 lakh we have set off against other head. So for balance we can set it off from where? So it has written then balance set it off from here. So here means income from house property. Okay, so is there any income from house property? So the answer is yes. Okay, so this 3 lakhs can be set off against income from house property. I hope this is quite clear. So basically there is a limit on house property loss. Okay, if there is a house property loss of say rupees 10 lakhs, okay, I'm just giving another example, is rupees 10 lakhs, then out of this 10 lakh, first 2 lakhs can be only set off against other head of income, and balance 8 lakhs can be set off against income from house property if there is any income from house property. If not, then this 8 lakhs can be carried forward to the next subsequent year. So don't worry, what I just now said, I'll explain you in the table itself. So this balance 3 lakh can be set off against income from house property up to the income that is 2 lakhs. Okay, so we can set off loss from house property 1 that is up to 2 lakhs. Okay, so that means house property incomes comes to 0. So there is still a balance of rupees 1 lakhs. Okay, there is still a balance of 1 lakh. What we have to do with this loss of 1 lakh, basically we'll carry forward the loss to the next year. Okay, to the next year. I hope this is quite clear to you all. Okay, so there are no losses. Basically we'll take out income from other sources 2 lakhs, income from capital gain, so outer column it will be 1 lakh, and there are no losses that can be set off from the income of business, so income from business also 3 lakh. That means total income, gross total income comes to around 2 lakh plus 2 lakh 4 lakh plus 1 lakh 5 lakh plus 3 lakh 8 lakhs. I hope this is quite clear to you all. Okay, so I hope you all have understood at least this part. Okay, at least this part. So let's revise it again. If there is any loss from house property, this loss can be set off against any income, that means any heads of income, but first set off the loss up to rupees 2 lakh from the other head, then balance can be set off from income from house property if there is any income from house property. I hope this is quite clear. But here in this case, the income was not sufficient enough to set off the entire loss of rupees 3 lakh. Okay, so there is a balance of 1 lakh loss, so which we are carrying it forward. So now let's come to this part. Okay, so in the subsequent year, that means in the next previous year, that loss of 1 lakh can be set off against the income from house property only. Then this carried forward loss of say rupees 1 lakh cannot be set off against any income. It has to be set off against the income of house property, and that also maximum up to 2 lakhs. That means this 1 lakh can be set off in the next year, that is the next previous year, only against the income of the house property. Okay, but for example, if this loss would have been rupees say 4 lakhs or say rupees 5 lakhs, so the entire 5 lakhs would not be set off against the income of the house property, but up to only 2 lakhs only it can be set off. Okay, so up to how many number of years the loss from the house property can be carried forward if that loss is not been 100% set off against the income in the previous year, in the first year when such loss was incurred. So from the first year, the loss which has incurred, it can be carried forward up to 8 previous years. Okay, number of years, that means 8 previous year. Your year means previous year. Okay, I hope this is quite clear. And return filing up to due date is not compulsory. As I told you, this particular column I'll explain you when we will be studying an entire chapter on this return. Okay, so don't worry about that. We'll come back again here and we'll understand it. In this chapter or in heads of total income, the major role played by this particular column is at CA final level. So kindly preserve the notes at CA final level also. This notes will be quite helpful. Okay, I hope this is quite clear that you have understood now what these columns are about. Okay. So basically, if there is a loss from any head, that means it can be set off against which income that it has been given in this column. Okay, in the previous year, that means the first year in which that loss was incurred, that means a previous year 1920. What we have to done in the subsequent year, if the losses are not entirely set off in the previous year, so it can be carried forward, and in the carried forward years against which income that particular carry forward loss can be adjusted is given in this column. I hope this is quite clear. This column says how many number of years a particular loss, if not set off in the previous year, can be carried forward. I hope this is quite clear to you all. Okay, so I hope the losses from house property is quite digestible. How a loss from house property can be set off against any income. If it is not 100% set off, then what will be the case in the subsequent year against which income it can be set off? It can be set off against income from house property only. For how many number of years the losses from the house property can be carried forward if it is not 100% set off? For 8 previous year. I hope now you have understood the flow of how to read this particular table, because many a times the student just take the notes but they don't know how to interpret the note. That's why interpretation of the notes is important by the person who has created such notes. Okay, otherwise it won't be of any use, because somewhere I have written in short, then balance here. What does this balance here simply means, you will understand when I will explain it to you. Okay, so I have tried to keep the notes concise as much as possible, so that at the last day of revision it does not consume a lot of time to you all. Okay, when you are revising. Okay, so let's move on to the next head, losses from capital gain head. Okay, so if there is a short term capital loss, so what does this short term capital loss or long term capital loss means? Basically, when we will study capital gain chapter, that time you'll come to know what does this mean. But don't worry, for time being you have to just understand it, because when we will be studying income from capital gain, that time questions from this chapter will also come. Okay, so if you are aware of this chapter, that time it will be easy. Okay, so for understanding this chapter, what does short term capital loss means and what does long term capital loss means is of not much importance. Okay, so let's understand this head. If there is a loss from capital gain and that loss is short term capital loss, then this loss can be set off against any capital gain. That means whether it can be a long term capital gain or it can be a short term capital gain. Okay, any capital gain means only two types only, long term capital gain or short term capital gain. So I'll just write it over here, LTCG or STCG. I hope this is quite clear. This is the acronym for long term capital gain. This is the acronym for short term capital gain. I hope this is quite clear to you all. But if the short term capital losses are not fully set off against the income in the previous year, that is the long term capital gain or short term capital gain in the previous year, whether these losses can be carried forward? Yes, this short term capital losses can be carried forward to the subsequent year, and in that subsequent year against which head of income it can be set off? It can be set off against any capital gain. I hope this is also quite clear. So for how many number of the years the short term capital loss can be carried forward? It can be carried forward to 8 previous year. That means 8 subsequent, that is 8 future previous year. I hope that is quite clear. So for time being, our previous year, relevant previous year is 1920, but for the next year the relevant previous year will be, I am talking about previous year. Okay, 2020-21. I am not talking about the assessment year over here. Okay, for our exams our assessment year is 2021. Okay, but our previous year is 2019-20. I hope this is quite clear. So let's come back to losses from capital gain head. Okay, so if there is a short term capital loss, this short term capital loss can be set off against any capital gain. What? Against any capital gain, that means income. But if that losses are not set off entirely, that means 100% in the previous year, this loss can be carried forward to the subsequent year for 8 previous year, and in the subsequent years the losses can be set off against any capital gain. Okay, that means a capital gain loss can be set off against a capital gain income only, and specifically short term capital loss can be set off against any capital gain. I hope this is quite clear. But in case of long term capital loss, okay, in case of long term capital loss, the long-term capital loss can be set off against long-term capital gain only. I have written here specifically long-term capital gain only. But if this loss is not been sufficiently set off in the previous year or 100% set off in the previous year, then this loss can be carried forward for 8 previous years. Okay, so let's revise. If there is a loss from the head of capital gain, short-term capital loss can be set off against any capital gain, that is long-term capital gain or short-term capital gain in the previous year. Okay, but if 100% these losses are not set off, it can be carried forward for 8 previous year. Okay, and it can be set off against any capital gain, that means long-term capital gain or short-term capital gain. Okay, but if the losses from the head of capital gain is a long-term capital loss, this capital loss, long-term capital loss, can be set off against only long-term capital gain income. Okay, but in the previous year, if it is not 100% set off, then this loss can be carried forward for 8 previous year, and in the subsequent previous year it can be set off against only long-term capital gains. I hope this is quite clear. So we have completed point 3 also. Okay, let's move on to the other head loss. So if there is a loss from other sources, okay, this is a very rare possibility. I'll write here rare. Okay, at CA final level, basically these questions are asked, but at IPC level, I hardly feel they'll ask. Okay, but at times they can simply give as it is, like loss from other sources. They'll not describe from which source caused such loss. Okay, and simply they'll write loss from other sources, and you have to just adjust it against different heads. That means you have to set off that loss against the income of other heads. Okay, so let's understand this. Losses from other sources. Okay, so that means we have completed 3 heads. Okay, if there is a loss from salary, what we have to do? Then we have studied if there is a loss from house property, against which income it can be set off in the previous year and as well as the subsequent year, and for how many number of years that loss can be carried forward if the loss is not 100% set off in the previous year. Then we have studied loss from capital gain. So if there is a loss from capital gain, so for against which income it can be set off in the previous year, but if it is not set off 100% in the previous year, it can be carried forward to the subsequent year. For how many subsequent year? 8 subsequent year, and against which income it can be set off, that also we have studied. So let's move on to losses from other sources head. In losses from other sources head, this is a very rare possibility that in exam they will ask you to identify the loss from other sources. They will simply give you the question straight that there is a loss from other sources. Then what you have to do is just need to adjust it, that is set it off against other heads of income which are having profit or gain. Okay, so if there is a loss from other sources, it can be set off against any income including salary. Okay, I've written here any income including salary. So whether the losses from other sources, if not set off 100% in the previous year, whether that can be carried forward? No. NA means not allowed to carry forward. So that means in the subsequent year, in the subsequent previous year, these losses cannot be set off. I hope this is quite clear. So that's why I'm saying that the question from loss from other sources is very rare in the exam. But even if they have asked it in the exam, you just need to adjust it from any income including salary. Just like here there was a condition, here there are no condition, but here any amount of loss can be set off against any income including salary up to whatever income that the assessee has earned. For example, if the assessee has earned say rupees 5 lakh and the losses from other sources is rupees 6 lakhs, then up to 5 lakhs this losses can be set off. Okay, and that 1 lakh which is not set off will get lapsed and won't get carry forward. Okay, so that's what we have studied it from here. I hope this is quite clear. So we have completed the 4th head. Okay, let's move on to our next head, that is the business head. If an assessee incurs a loss from business and profession, how we will adjust it? So there are possibilities. An assessee doing a normal business, an assessee doing a speculative as well as specified business, an assessee doing horse race business, and unabsorbed depreciation. This is not a type of a business, but this is a kind of expense. Okay, so let's understand. Loss from business and profession. Under loss from business and profession, if there is a loss from normal business, this loss can be set off against any head except salary. That means, let's come into our example. If here in the business, this 3 lakhs would have been a loss. Okay, if this would have been a loss, I'll write with the red pen so that you can easily recognize what changes I am making now. So basically, if this business is a loss, so under this head, income from PGPP, there will be no income. Okay, so basically it would be a dash. Okay, and this 3 lakhs can be set off against any head of income except salary. Okay, so that means this 3 lakhs loss cannot be set off against the income of salary. It can be set off against the income from other sources or income from capital gain. So is there a sufficient income left in income from other sources and income from capital gain to set off this 3 lakhs of loss? So the answer is yes. Okay, so here we'll erase and we'll write less loss from business. Okay, since in income from other sources the income is 2 lakhs, so up to 2 lakhs the losses of business will be set off from income from other sources. That means income from other sources will be 0. Okay, then we'll reduce the remaining loss from business. How much is the loss remaining? 1 lakhs. Okay, so this 1 lakh will be reduced from this income. That means income from capital gain will also be 0. I hope this is quite clear. I hope you have understood the example. Okay, and the gross total income of the assessee will be 2 lakhs now. Okay, I hope this is quite clear. So let's move back into our notes. Okay, and revise it. Okay, so if under the head of business, okay, assessee incurs a loss from business and profession, and this business and profession is a normal business. What does normal business means? What does speculative business means? What does specified business means? I'll explain you, don't worry, but for time being understand normal business. Okay, because any business will be normal business, and this are actually specified business for which if the assessee incurs a loss, there are special heads under which that loss can be set off. Okay, so this is any business. Okay, normal business means any business, business of trading, business of garment, business of like nut bolts, hardware, any business. Okay, so normal business, if the assessee incurs a loss, it can be set off against any head except salary. Okay, but if the loss is not set off in the previous year 100%, then the loss will be carried forward for how many previous year? It will carry it forward for subsequent 8 previous year. Okay, I hope this is quite clear. And in the subsequent previous year, against which head of income this business loss will be set off? It will be set off against the same income. What does this same income mean? So let's come into our example. Okay, for example, if here 3 lakhs, instead of 3 lakhs, here it would have been say rupees 5 lakh. That means only 3 lakhs of losses are set off. Okay, and 2 lakhs of losses are carried forward. So this carried forward losses will be set off. Okay, this carried forward losses will be set off against the income of any business. If an assessee is having 2 to 3 business, from any one business he incurs loss, then the loss of the first business can be set off against the profit of the second and third business. I hope this is quite clear to you. So that means this 2 lakhs whichever is been carried forward, this loss, carried forward loss, can be set off only against the business income that has been earned in the subsequent previous years. Okay, I hope this is quite clear. So let's revise this. If a assessee earns a normal business loss, then it can be set off against any head except salary in the previous year. But if any loss is not 100% set off in the previous year, that means the remaining loss has to be carried forward for how many years? For 8 previous years. And in the subsequent previous years, against which head of income such carried forward losses will be set off? Then it will be set off against the business income only. Okay, in case of speculation business and in case of specified business, if the assessee incurs the loss, so what does this speculation and what does this specified business means? So let's understand the speculation business first. Speculation business simply means there are stockbrokers. These stockbrokers basically are the traders. What they practice is they purchase the security in the morning, okay, and they sell off a particular security in the evening. So basically they are not taking the delivery of the security in the stock market, and they are just simply doing an intraday transaction. What does intraday transaction means? Intraday transaction means a particular assessee is purchasing a share on a stock market in the morning or at any time of the day when the stock market is open, and before the stock market closes it sells that particular shares or security what he has purchased from the stock market, and the difference amount between the purchase and the sale is the profit what he has earned. Okay, that profit whatever the assessee has earned is the income, that means is the business income. So that is known as speculation. Why the word for that business is called speculation? Because what basically that broker is doing, he is speculating. That means in the morning he purchased it, and at the day end if he incurs a profit, that means particularly understand with an example. I can make you all understand with an example. Okay, broker, this is our broker. Okay, he purchased Reliance Limited share for rupees 1000 in the morning. Okay, but before the stock market gets closed, he sold Reliance Limited shares for rupees 1200 in the evening. Okay, before stock market closes. Okay, so basically the price of Reliance Limited shares was rupees 1000 in the morning, but before the stock market gets closed the value of Reliance Limited shares went up to 1200. That means by doing this purchase and sales he has earned a profit of rupees 200. I hope this is quite clear. So basically whatever this profit he has earned is known as profit from speculation business. Okay, so whatever entire this process is known as, wait I'll write it for you all, is known as intraday transactions in stock market. Okay, so don't worry, just for your understanding I have explained you, don't try to over analyze it. Okay, so if an assessee has incurred a loss from a speculative business, okay, so there is a possibility that here in Reliance Limited shares he has purchased it for rupees 1000 in morning, but the share price turned out to rupees 800 at the day end before the close of the market. That means then the assessee will earn a loss of rupees 200. I hope this is quite clear. So here we are talking about that speculation loss. Okay, if an assessee incurs a speculation loss from a speculative business, okay, then such losses can be set off against the same income. Okay, against which income it can be set off? Against the same income. I hope this is quite clear to you all. If such losses are not 100% set off in the previous year, then the speculation business loss can be carried forward for 4 previous year. Okay, and in the subsequent previous year the losses of the speculative business can be set off against the same income. Same income means speculation business income. If there is a loss from speculation business, the loss of speculation business can be set off against the profit of speculation business. I hope this is quite clear. Then what does specified business mean? Specified business means section 35 AD. Section 35 AD we will any which way study in PGPP chapter. Okay, that is business and professions chapter. That time you will come to know what does this specified businesses means. There are list of businesses that income tax has specified. Okay, under section 35 AD. If an SSA incurred a loss under specified business, then such loss can be set off against the income of a specified business in the previous year. But if in the previous year if there are no sufficient income or such losses are not 100% set off, then such losses of the specified business can be carried forward for infinite number of years. And in the subsequent previous year, the specified business losses also can be set off against the same business. That means from the income that or from the profit from the specified business. I hope this is quite clear to you all. So now let's understand the third type of a business. I hope this is quite clear. Speculation business and specified business. Okay, so we have understood normal business. The normal business means any business other than speculation business, specified business, or business from horse racing. I hope this is quite clear. So let's understand, if an assessee incurs a loss from horse race business, if an assessee incurs a loss from a horse race business, then the losses from the horse race business can be set off in the previous year from the profits of horse race business. But if such horse race losses are not 100% set off in the previous year, or there are no sufficient income in the previous year from the horse race business, then the horse race business loss can be carried forward for 4 previous years, okay, and can be set off in the subsequent previous year against the same income, that is the profits from the business of horses. I hope this is quite clear. Okay, so since we have understood this second point, so understanding this third point has become comparatively easy. Okay, so I hope you have understood, if there is a horse race business loss, from which income it can be set off, and for how many number of years the losses can be carried forward if it is not set off in the previous year, that is the first year in which such losses from the horse race were incurred by the assessee. Okay, and what does this unabsorbed depreciation means? Unabsorbed depreciation, this concept is from the head income from PGPP, okay, that is income from business and profession. When we will be studying that chapter, you will come to know what does this means, unabsorbed depreciation. Basically, unabsorbed depreciation can be set off against any head except salary. If there are unabsorbed depreciation which are not set off in the previous year, then the unabsorbed depreciation can be carried forward to an infinite number of years. Okay, I hope this is quite clear to you all. Okay, and in the subsequent previous year, the unabsorbed depreciation can be set off against any head except salary. I hope this is also quite clear. Okay, let's revise the entire table first of all from starting. Okay, let's start. Is there a possibility that an assessee can earn a loss from salary? No, losses from salary are not possible. So there is no question of setting off the losses from salary in the previous year as well as in the subsequent year, and there is no question of carrying forward of such losses. Okay, is there a possibility that an assessee can incur a loss from a house property? The answer is yes. Then the losses can be set off against any income, but first set off loss up to rupees 2 lakh from other head, then balance here, that means the balance losses can be set off from the available income from the head of house property. But even if after utilizing the income available to set off the loss of the house property, the entire loss of the house property is not set off, the loss of the house property which is not set off can be carried forward for 8 previous year. Okay, and in the subsequent previous year, the losses from the house property that are carried forward can be set off against the income from house property only, that also up to maximum rupees 2 lakhs. I hope this is also quite clear. Let's move on to our third head, okay, that is losses from capital gain. Okay, so whether there is a possibility that an assessee can incur a capital loss? Yes. If the capital loss is a short-term capital loss, then short-term capital loss can be set off against any capital gain, that is long-term capital gain or short-term capital gain. But if in the previous year the entire short-term capital loss is not set off, then the remaining or the balance capital loss of the short-term capital loss can be carried forward for the 8 previous years. Okay, and in the subsequent previous years, the short-term capital loss can be set off against any capital gain, that is long-term capital gain or short-term capital gain. I hope this is quite clear. But if the losses are losses from long-term capital loss, then the long-term capital loss can be set off in the previous year only from long-term capital gains. Okay, but this long-term capital loss is not 100% set off in the previous year, then this long-term capital loss can be carried forward for the 8 previous years. Okay, and in the subsequent previous year, the carried forward long-term capital loss can be set off against the long-term capital gain only. I hope this is also quite clear. Let's move on to the next head, losses from other sources. If there is a loss from other sources, then the loss can be set off against any income including salary. Okay, but that losses from the other sources cannot be carried forward to a subsequent year if such losses are not 100% set off in the previous year against any income including salary. I hope this is also quite clear. Then let's move on to our next head, that is business. If there is a loss from business or profession, and specifically the business or profession is a normal business or profession, then the losses from the normal business or profession can be set off against any head except salary. Okay, but if such losses are not 100% set off in the previous year, that such losses can be carried forward for 8 previous year, and in the subsequent previous year the losses of the normal business can be set off against the same income. That means the income earned from the normal business, that is any income other than these two businesses. Okay, I hope this is quite clear. Speculation business and specified businesses. If an assessee incurs a loss from speculation business or a specified business, then the losses of such business can be set off only against the income of same business, that is speculation business or specified business income. Okay, I hope this is also quite clear. If the assessee incurs loss from horse race business, then the losses of the horse race business can be set off against the same income, that is income from horse race business. If the horse race business loss are not 100% set off in the previous year, then the horse race business loss can be carried forward for 4 previous year. In the subsequent previous year, the horse race business loss that is been carried forward can be set off against the business income of horse race only. Okay, unabsorbed depreciation. Unabsorbed depreciation can be set off against any head except salary. Okay, if unabsorbed depreciation is not 100% set off in the previous year, then unabsorbed depreciation can carry forward for infinite previous year. Okay, and in the subsequent previous years, the unabsorbed depreciation which has been carried forward can be set off against any head except salary. I hope this is quite clear to you all. Okay, so if you all want, please pause the video and take a 5 minutes break and we'll move ahead. Okay, I hope you all have taken a 5 minutes break. Let's start again. In case of presumptive income, unabsorbed depreciation will not be allowed as deduction. So basically this note you will come to understand after income from PGPP. Okay, so to keep the notes complete, I have already written the notes. After the first cycle of entire income tax act, you will come to understand the notes in a more better manner. Okay, so what does presumptive income means? Presumptive income is a scheme given by income tax act, or we can say government, for small business houses who are carrying on a business with a certain amount of turnover. So to give some relaxation to such kind of business, there is a presumptive income. Okay, so in case of presumptive income, unabsorbed depreciation will not be allowed as deduction. So now let's read speculation business. So for this speculation business, we have already studied here. Okay, for speculation business, I have given a chart. Okay, part 1 and part 2. Let's read it first. If speculation business is the primary business of the assessee, then set off of speculation business loss can be done with the normal business income. I hope you all have not understood this. Don't worry, let's completely read it, then I'll make you all understand. But if the primary business of the assessee is the other than speculation business, then speculation business loss cannot be set off against the normal business income. Okay, that is, can be set off against the same speculation income only. We have already studied this. Okay, so for better understanding of this chart, let's come back here. Speculation business loss can be set off only against the speculation business income only, that we have already studied. But what does this first part says? If the speculation business is the primary business of the assessee, then set off of speculation business loss can be done against the speculation business income as well as normal business income, only. I hope this is quite clear. So that's what I have written here. If the speculation business is the primary business of the assessee, then set off of speculation business loss can be done with the normal business income also. So there was a restriction. We have studied speculation business loss can be set off only against the speculation business income only. But there is an exception for that restriction, which says if the speculation business is the primary business of the assessee, then set off of the speculation business loss can be done with the normal business income. Okay, income means profit. I hope this is quite clear to you all. So now let's read part 2. What does part 2 says? But if primary business of the assessee is the other than the speculation business, that means the primary business is the normal business and speculation business is a secondary business, then the normal case, then speculation business loss can be set off only against speculation business income only, and it won't get a set off under the normal business. Okay, so that's what I have written here in part 2. But if primary business of the assessee is other than speculation business, then speculation business loss cannot be set off against normal business income, that is, can be set off against same speculation income only. So what I have written here, that is simply means speculation business loss can be set off against same business income. I hope this is quite clear. Okay, the losses of normal business and unabsorbed depreciation can be set off against speculation business income of the assessee. So what is this? Okay, so let's come back over here. Normal business loss can be set off against any head except salary. So which means that normal business loss can be set off against the normal business income, or against the speculation business income, or against the horse race business income. Similarly, unabsorbed depreciation can be set off against any head except salary, so which includes normal business income, which includes specific business income, or speculation business income, okay, or horse race business income. So there is a restriction on setting off the losses of speculation business and specified business and horse race business, but there is no restriction for normal business loss to set off against this incomes, okay, or unabsorbed depreciation to set off against this incomes. Okay, I hope this is quite clear. So that's what this note is about. I hope you have understood this first page of the note. Let's move on to the next page of the notes. Okay, so only this much we have to study, then set off and carry forward chapter comes to an end. Okay, so let's start with section 78, succession of business. You don't need to remember this section, but I have written it. Okay, don't worry about that. Basically this section is important from MCQ point of view. Okay, so what does this section says? In case of a succession of a sole proprietary business, what does succession means? Succession means, for example, your father, okay, your father is having a business of a ration shop, okay, that means a supermarket kind of a shop, and he is a sole proprietor of that business. So after his demise, you will be the proprietor of that shop. So in that case, what we have to do is given in this section. So let's read this section entirely first. In case of a succession of a sole proprietary business or a partnership firm business, the losses can be carried forward by the person incurring the loss and not the successor. But in case of a succession due to inheritance, then it will be carried forward and set off. What does this mean? So let's understand it with an example. For example, Mr. Ramesh is assessee. Okay, his father had a supermart, okay, and his father was sole proprietor. Okay, now after the death of his father, Mr. Ramesh has received this supermart as inheritance. I hope this is quite clear. That's what we have read in this section, section 78. Okay, so what is the case? Mr. Ramesh is the assessee. His father had a supermart and his father was sole proprietor. After the death of his father, the business got transferred to Mr. Ramesh. Okay, that means Mr. Ramesh has received this supermart as inheritance. Okay, so while his father was carrying on the business of supermart, okay, that is a ration shop, his father was carrying, that means his father had a brought forward loss of say rupees 10 lakh. So this brought forward loss of 10 lakh can be carried forward by Mr. Ramesh also, since Mr. Ramesh has received the supermart as inheritance. But what if after the death of father, Mr. Ramesh sold this supermart, sold this supermart to Mr. X, okay, that is he has sold it and it has not been transferred to Mr. X as a inheritance. Okay, so since it has not been transferred as inheritance, this brought forward loss which was carried by Mr. Ramesh's father of rupees 10 lakhs will not be allowed to Mr. X to carry forward and to set off against the income. I hope this is quite clear. So let's read this section again. In case of succession, that means transfer of the business. Okay, that means after the death of the proprietor or willful transfer, or even if the succession is not because of the debt, the father is simply transferring on his business to his son, okay, which is very much possible. Then the losses incurred by the previous sole proprietor, that is the father, can be utilized by the current sole proprietor, that is the son. But if the succession is due to other than inheritance, that means sale, then such new sole proprietor will not be allowed to carry forward or utilize the carried forward losses of the old sole proprietor. I hope this is quite clear. So let's read it. In case of a succession of a sole proprietary business or partnership firm business, the losses can be carried forward by the person incurring the losses and not by the successor. That means if the succession is other than inheritance, then the losses can be carried forward by the person incurring the loss. That means the old sole proprietor or the old partners and not the successor. But there is an exception. In case of a succession due to inheritance, then it will be carried forward and set up. Then what will be carried forward? What does this it means? This it means the losses incurred by the old sole proprietor can be carried forward. I hope this is quite clear. So let's move ahead and understand this order and set off and carry forward of losses under the head of PGPP. So basically when we will be studying income from PGPP, that time we'll come back over here and we'll understand this. Because if I try to explain you right now what does this means, you'll get confused because there are many much technical terms like unabsorbed capital expenditure, scientific research, unabsorbed family planning expenditure. So basically to understand this we need to study income from PGPP. When we'll study that, you'll automatically come to know what is this particular thing. Okay, so here our chapter set off and carry forward comes to an end. Okay students, now come into the format book where I have already made a format for you all. Basically the format that you are seeing right now on your screens is the extension of the table that we have studied in the notes. I hope you all are well versed with the table by now. Okay, so let's understand the format now. Okay, so basically whenever we want to start a sum in the exam, we need to write the name of the assessee, the age of the assessee if the age of the assessee is given in the question. If not, then do not write this age. Okay, then we need to write the residential status of the assessee. But if in the question there is no hint given about the residential status of the assessee, we need to assume that such assessee is a resident, ordinary resident. I hope this is quite clear. And in the notes we need to write it has been assumed that the assessee is resident, ordinary resident. I hope this is quite clear to you all. So now let's move into the format. Okay, basically what I have done is I have mentioned all the different heads of income, that is income from salary, income from house property, income from capital gain, income from other sources, income from PGPP. Okay, and under this PGPP, normal business and profession, speculative business, specified business, business of owning and maintaining horses. I hope this is quite clear. So in this format we can come to know that losses can be set off against such different heads of income. I hope this is quite clear. So let's start. If an assessee earns income from salary, then which all losses can be set off against the income of salary? So let's see that. Okay, losses from house property can also be set off against the income from salary, as well as losses from other sources can also be set off against the income from salary. But here you can see there are two stars. That means there is a note. So let's see the note at the end of the table. So the note says that in total, maximum 2 lakhs can only be set off against the other head of income if there is a house property loss in the previous year 2019-20, that is the first year of the house property loss. I hope you remember this. So if you don't remember, let's revise our table. Okay, in the notes, losses from the house property can be set off against any income, but first set off losses up to rupees 2 lakh from other head, then balance over here. Then balance over here means from the house property income of the previous year 1920. But if the losses of the house property are not 100% set off in the previous year 1920, then such losses can be carried forward for 8 previous year, and the losses that are carried to the subsequent previous year, that can be set off in the subsequent previous years against the income from house property only. But there is a limit of maximum 2 lakhs. I hope this is quite clear. And we have also solved an example in the initial part of the video where I have told you there was a house property one in the previous year 1920. It incurred a loss of rupees 5 lakh. So this loss of rupees 5 lakh will be divided into two parts, that is 2 lakh and balance. So this 2 lakh of the loss can be set off against the other heads of income first, okay, cumulatively, and then the balance 3 lakh can be set off against the income of the house property if there is any income from the house property in the previous year 1920. I hope this is quite clear. So I'll just mention here again previous year 1920. Okay, so as you can see that the balance loss of 3 lakh was set off against the income from house property 2. So out of this 3 lakh, 2 lakh was set off against the income from house property 2 in the previous year 1920, and there was a balance of rupees 1 lakh which was carried forward to next years. Okay, I hope this is quite clear. So moving back to our format book, let's revise this. If an assessee is having income from salary, then following losses can be set off against income from salary, that is loss from house property and loss from other sources. I hope this is quite clear. Then income from house property, if an assessee is having, then which all losses can be set off against such income from house property. Let's see that losses from house property itself. If there are two house property and from one house property an assessee is earning the income, then from the second house property there is a loss, that such loss can also be set off against the income from house property, but there is a condition that first set off up to 2 lakhs from other heads of income, then balance set off from the house property income. That's what we have studied in the notes. We just revised this part. Okay, so let's come back in the format book. Here the first loss that can be set off was loss from house property. The second loss that can be set off is brought forward loss from house property. So there was a condition that if there is a brought forward loss from the house property, then such losses can be set off only against the income of the house property. So basically that is what I have given in the star. So let's come down at the end of the table and let's read that. If the brought forward losses, then maximum 2 lakh can only be set off against the income from house property. So there is a limit also, maximum 2 lakh, and such house property brought forward losses can be set off only against the income from house property. I hope this is quite clear. So let's move on to the next loss that can be set off against the income from house property is loss from other sources. Then the next loss that can be set off against the income from house property is loss from PGPP. Your PGPP means normal business. Okay, simply normal business only in the first year of the loss. So let's come to our notes. There we have studied if an assessee is having a loss from a normal business, then such losses of the normal business can be set off against any head except salary. But in the subsequent year, the normal business loss can be set off against the same income. Your same income might be misleading, so that's why I'll write here PGPP income. Basically PGPP income means all of this. Wait, I'll show you the marking. Basically all of this. Okay, so if you want, I'll give one more hint over here: normal business plus horse race business plus speculation business or specified business. Okay, I hope this is quite clear. So let's come back to our format book. Okay, losses from PGPP only, that means the normal business in the first year of the loss, can be also set off against the income of the house property. Unabsorbed depreciation from normal business can be set off against the income of house property. So come back to the notes. Here we have studied unabsorbed depreciation, and what we have studied that if an business is having an unabsorbed depreciation, then such unabsorbed depreciation can be set off against any head except salary, and in the subsequent years also any head except salary. For how many number of years it can be carried forward? It can be carried forward for infinite years. I hope this is quite clear. Let's come back to our format book and let's see the other heads of income. Okay, the third head of income is income from capital gain. If an assessee is having an income from capital gain and specifically long-term capital gain, then which all losses can be set off against such long-term capital gain is long-term capital loss as well as short-term capital loss can be also set off against the long-term capital gain. Hope this is quite clear. But if the assessee is having a short-term capital gain, then losses that can be set off against the income of short-term capital gain is short-term capital loss. I hope this is quite clear. But this was specifically for long-term capital gain and short-term capital gain. So now let's see the common losses that can be set off from the long-term capital gain as well as short-term capital gain is losses from house property. Here also I have marked 2 stars, so you know basically what 2 stars indicate. We have already studied that. Okay, and the next losses that can be commonly set off either from long-term capital gain or from short-term capital gain is unabsorbed depreciation from the normal business. I hope that is quite clear. So let's move on to the next head of income, that is income from other sources. Okay, if an SSC is having an income from other sources, then following losses can be set off against the income from other sources. The first loss that can be set off from the income from other sources is losses from the house property. Here also there is a 2 star. You already know what does 2 star indicate. Then the next loss that can be set off from the income from other sources is losses from other sources itself. Okay, there can be possibility that an SEC can have an income from other sources as well as a loss from other sources. So they both can be set off. I hope this is quite clear. And you also know that the losses from other sources cannot be carried forward to the subsequent year, as we have already studied it in the note. See here, I hope this is quite clear. So now you can see that the format as well as the notes have a 100% linkage. This is basically the format for presentation in exam, so that you are aware which all income the SEC earns, and against such income which all losses can be set off. Okay, so many of the time students memorize this table, okay, but they do not know how to implement this particular table in the exam while solving the sum. So in order to reduce that hassle and to increase your speed of solving the sum in the exam, this format was created. Okay, so losses from other sources can also be set off against income from other sources. Losses from PGPP, here PGPP again means normal business. If you want, make a line and write N over here in bracket, that means normal business. Only in the first year of the loss, this basically this. Okay, I hope this is quite clear. So you can see the linkage between the notes as well as the format book. Then the next loss that can be set off against income from other sources is unabsorbed depreciation from the normal business can also be set off against the income from other sources. I hope this is quite clear. So basically now we are moving to the last head of income, that is PGPP. Under PGPP there are 3 types: normal business and profession, speculative business and specified business. I hope this is quite clear. And then last business is owning and maintaining horse race business. So basically what I have tried to do is I have kept a common losses that can be set off against any income, that is either from normal business, either from speculative business, either from specified business, or either from owning and maintaining horse race business. So this common losses can be set off against any of such incomes. Okay, but there is a certain restriction of setting off certain losses against certain incomes only. So that's what I have done over here. So basically if an assessee is having an income from business and profession, that is a normal business, then which all losses can be set off? The losses from the PGPP, that is normal business, for the current previous year. So you can see I have put a N in bracket. Then less brought forward losses from PGPP for earlier years. So basically which all losses can be set off against income from business and profession, that is for normal business, losses from PGPP for current previous year, and brought forward losses from PGPP for earlier previous year, that is of the normal business. I hope that is clear. And as well as which all losses can be set off against an income from normal business and profession is losses from house property and unabsorbed depreciation from normal business only. I hope this is quite clear. So let's understand income from speculative business. So which all losses can be set off against income from speculative business is losses from PGPP, that is normal business, as well as speculative business losses, and brought forward losses from PGPP, that is normal business for earlier year, as well as speculative business of the earlier year can be set off against the income of speculative business only. But if the SSC is having income from specified business, then which all losses can be set off against such specified business income is losses from PGPP, that is normal business plus specified business, and brought forward losses from PGPP of earlier year means normal business as well as specified business losses can also be set off against the income of specified business. I hope that is quite clear. Then if the assessee is having the income from owning and maintaining the horse race, then which all losses can be set off against the income of owning and maintaining horse race is first loss says losses from PGPP, that is normal business as well as horse race business. Okay, then brought forward losses from PGPP for earlier years, that means normal business as well as horse business can be set off against the income from owning and maintaining horses. I hope this is quite clear. So this is the common expenses that can be set off either from income from speculative business as well as specified business as well as income from owning and maintaining horses. I hope this is quite clear. So I hope you all like the format, and now we will solve one sum. So basically you will come to know how this format is effective. Okay, so let's solve a sum. So before solving the sum, I'll request you all to kindly get your study materials. Please pause the video and kindly get your study materials. Okay, I hope you all have got your study materials. So let's come to our study material and come on page number 6.18, and there we will solve question number 2 in our format book. Okay, so basically what does question number 2 says? Question number 2 says Mr. Soham submits the following detail of his income for the assessment year 2020-21. So basically this is the table which includes the income of Soham as well as losses that Soham has incurred. Okay, and what does the question is asking us to do? The question is asking us to calculate gross total income and the losses to be carried forward. So basically the question is asking us two things, that is we need to calculate gross total income as well as we need to calculate the losses to be carried forward. I hope this is quite clear. So in the format book what you have seen is the format of setting off the losses against the income, against the different heads of income. But on the next page I have made a format to show how we will present in exam the carry forward of losses. So don't worry, now when I'll be solving a sum, that time I'll show you what details we need to feed in this format. Okay, so moving back to our study material, I hope you all have your physical copy of the study material with you. If you don't have, please download the PDF from the description below. Okay, so let's start it. Okay, so there are few things that I want to guide you all. Whenever you are reading a sum of set off and carry forward, after reading the question you come to know that this particular question is a question of set off and carry forward, then we need to mark the incomes first and we need to simply feed all the income in the format, and then we will come back to the losses and then we'll decide which all losses can be set off against which heads of income. Okay, so basically now at this moment we know this question is of set off and carry forward, but in the exam you simply read the question in a speedy manner. Okay, just give a glance over it and recognize which chapter this question is. Then if you come to know this question is of set off and carry forward, then simply start like this. Okay, so basically the first line item is income from salary. So we know that this is an income and under which head it falls under the head of income from salary, so we'll mark that. Then the second is losses from let out house property. So basically that is a loss, we'll keep it as it is, will not put any marking. Then the next line item is income from sugar business. So basically this is income from PGPP, that is this is income from business. And then the next line item is losses from iron ore business brought forward discontinued in previous year 2014. Basically this is a loss, we'll check this out after checking all the incomes. Then the next line item is short-term capital loss. Short-term capital loss, basically this is also a loss. Then the next line item is long-term capital gain. So basically long-term capital gains fall under the head income from capital gain. I hope that is quite clear. Then the next line item is dividend. So dividend is a part of income from other sources, but such dividend are exempt under section 1034. Okay, the next line item is income received from lottery and winning. Income received from lottery and winning is a part of income from other sources. Okay, and then the next line item is winning from card game. Winning from card game is also an income under the head of income from other sources. Agriculture income is exempt under section 10 subsection 1. Okay, so we know this income will not form part of the SSA's total income, so we'll not include it. Okay, basically this also will not form part of the SSA's total income. Okay, but we need to present it in exam. So how to present it also I'll show you, so don't worry about that. So the next line item is short-term capital loss under section 111A is rupees 10,000. Okay, this is the loss. So basically we'll see this at the end. Okay, bank interest on fixed deposit. Bank interest on fixed deposit is basically an income under the head income from other sources. So I hope this is quite clear. So now you can recognize that one line item under the head of income from business and profession, one line item under the head income from capital gain, and there are four line items. Okay, one, 2 and 3 and 4. Okay, line items under the head income from other sources. So we need to create a table for income from other sources. Okay, so now let's start feeding the details in the format. Okay, so basically income from salary is how much? 3 lakh. So we'll come into our format and we'll write here. Basically before writing any details we'll write the name of the SSC. The name of the SSC is Soham. Okay, age is not given. Residential status we will assume resident, ordinary resident, and in the notes, see I've kept a place for writing the notes. I'll write here note 1. It has been assumed that Mr. Soham, who is the assessee, okay, is resident, ordinary resident. Okay, this much only we have to do. and here we will feed the detail under income from salary. Okay, 3 lakhs. Okay, let's come back to our study material and see income from sugar business, that is income from PGPP, is rupees 50,000. So we'll come into our format book, and from income from PGPP here, which is a normal business, we will write 50,000. I hope this is quite clear. So let's come back to our study material. The next income is income from capital gain, which is 40,000, that is a long-term capital gain. So basically we'll come into our format again. Under the head of income from capital gain, under that long-term capital gain, we will write 40,000. I hope this is quite clear. So basically you know what we are doing now. Okay, so just we are feeding the details of the income so that we can understand which all losses can be set off against the different heads of income. Okay, so the next income is income from other sources. So we'll make a table for that. So let's come to our format book, and here we'll make a table. Okay, particulars, and in bracket we'll write income from other sources rupees. Okay, the first was dividend. Dividend was of rupees 5,000, but there is an exemption under section 1034. Okay, so the entire 5,000 will be exempt, so we'll take in the outer column 0. The second income from other sources was income received from lottery winning, so we'll write income from lottery winning. How much it was? 50,000. Okay, then the next income from other sources was winning from card game, 6,000. Okay, income from card game is 6,000. Okay, and the next income from other sources was bank interest on fixed deposit. So bank interest on fixed deposit is 5,000. So we'll write that bank interest from FD is 5,000. The total comes to around 61,000. Okay, income from other sources total. Okay, so basically we will write here in place of income from other sources note 2. Okay, and here we will feed the detail 61,000. So whatever presentation I am showing right now, please follow this presentation in the exam. Don't make lines if you want to save time. Okay, just simply put the notations like this, note 2, so that this is a cross reference. The examiner will feel better that you have taken efforts to make the examiner understand how this works. Okay, so this will help you to fetch good marks. Okay, so see, there is a possibility that the question from income from other sources will be of minimum 5 marks. Okay, if a standalone question comes, and if you present it in this manner, they may give you 4 or 4.5 marks. Okay, so basically understand, whenever you are giving a CA exam, there is a very rare possibility that an examiner will give 5 out of 5 marks. Okay, so but we can try to get at least 4 or 4.5 marks. That is also enough. Okay, so coming back to the study material, so we can see that we have fed all the details of the income. Okay, so agriculture income, as I told you, is exempt under section 10 subsection 1, so that's why we are not taking it in our total income. Okay, I hope this is quite clear to you all. So now we'll look into the losses. Okay, so what all losses details are given? Loss from let out house property, and here it is not said whether it is brought forward or not. So basically I'll tell you how to interpret it. So if a question wants to say that this particular loss is a brought forward loss, then they will simply specify that this is a brought forward loss. Okay, since they have not mentioned anything that this is a brought forward loss or not, so this means this loss is for previous year 1920 only. So that means this 40,000 can be set off entirely against the other heads of income, as well as it can be set off against the income of house property. But the income tax has said that if there is a loss of house property, then first set off 2 lakhs from any different heads of income. Okay, so since this is 40,000, we will simply set it off against the income from salary, because there is no income from house property now. Okay, so let's come back to our format book, and we will write your loss from house property is 40,000. Okay, so the next loss is loss from iron ore business brought forward, that is brought forward discontinued in previous year 1450. So as we have studied that if there is a loss of business, okay, then the loss of business can be carried forward for how many years? 1450. So this means this 40,000 can be set off against the income from iron ore business. Okay, so Here's 8 years. That means we need to count from 2014-15 how many number of years has been. So we need to count the number of the years till the previous year 1920 to find out whether the number of the year that falls in the previous. So sorry. So we need to count the So we need to find out the number. So we need to find out the count of the number for the previous year 1920. So basically this is first year, and previous year 15, 16, 16, 17, 17, 18, 18, 19, 19, 20. So basically this all are previous years. Okay. So 1, 2, 3, 4, 5, 6. So basically our previous year 1920 falls on 6th year. That means the brought forward losses can be set off in the previous year 1920. I hope this is quite clear. So basically the losses from iron ore business can be set off against the income of PGPP only. I hope this is quite clear. So let's come back to our format notes. Okay, brought forward losses from PGPP for earlier year. So basically we can set that loss up to 50,000. Okay, because the entire loss is of 1,20,000, but the income from PGPP was only 50,000. But if such losses were not brought forward and such losses were of previous year only, then it could have been set off against other heads of income. Okay, so that's what we have studied in the format also. So you can see that out of this 1,20,000, only 50,000 is getting set off this year, and the balance of, so let's see how much balance is remaining. 1,20,000 minus 50,000 is equal to 70,000. This balance can be carried forward. So basically this format will come into picture now. Loss from iron ore business can be carried forward. Wait, carried forward I have written in full form. I'll write in shortcut. Can be carried forward for how many more years? For more 2 years. For previous year 2021 and 21-22. How much it can be carried forward? 70,000. I hope this is quite clear. Or we can simply write here for next to previous year. For next to previous year. I hope this is quite clear. So let's come back to our study material. So we have completed till here, and then the next loss is short term capital loss of rupees 60,000. Okay, so let's come into our format. So let's see, we have an income from long term capital gain. So from this income, short term capital loss can be set off. So up to 40,000 the losses can be set off of short term capital loss. Okay, so the loss is of 60,000, but the income of long term capital gain is 40,000 only. So the losses that can be set off is 40,000 only. I hope this is quite clear. So let's come back over here, and we can see that only 40,000 loss can be set off, and the balance 20,000 has to be carried forward. So we'll come back into our format book and in our carry forward format, and we'll write losses from short term capital loss. This is the acronym STCL. Okay, losses from short term capital loss can be carried forward. Okay, so since here the question does not say that whether it has been brought forward or not, so it simply means this loss is of previous year 1920 only. So if there is a loss from short term capital gain and it has not been 100% set off in the previous year 1920, then it can be carried for how many previous year? For 8 previous year. So we'll simply write here for next 8 previous year. How much it can be carried forward? The amount is rupees 20,000. I hope this is quite clear. I hope the format is helping you. Okay, so now let's come back to the question. The next line item was long term capital gain, that we have already fed. Dividend also we have already fed. This detail also we have fed. This detail also we have fed. This also is done. And the next is short term capital loss under section 111A. Since we don't have any income from the head, as you can see that whatever income was that it has already been set off, so there is no income. So this entire 10,000 we need to carry forward. So there is no detail about whether it was brought forward or not. So we can assume that this is for previous year 1920 only. So we'll simply write this detail in our format book where we write the detail about carry forward of losses. We'll write here loss from short term capital loss under section 111A can be carried forward for how many previous year? For next 8 previous year. So an amount will be 10,000. I hope this is quite clear. So now basically we have fed all the details. Now we need to find out the gross total income. Okay, and we have calculated already losses that can be carried forward. So let's find out the gross total income now. So income from salary will be 3 lakh minus 40,000, which comes to 2 lakh 60,000. Income from house property will be 0. Okay. Income from capital gain will be 0. Income from other sources is 61,000 only, because there were no losses that could be set off against the income from other sources. Okay. And income from business and profession will be 0. That means our total gross total income comes to around 2 lakh 60,000 plus 61,000, which is equal to 3 lakh 21,000. So I hope this is quite clear, and we have solved the entire sum in the format book, and you can see this was so easy. Okay, so if you revise this format and if you memorize this format also, you don't need to remember this notes also, because in the exam basically you need to present in the format manner only. So if you remember this table, it is sufficiently enough. I hope this is quite clear, but you need to revise the note for MCQ purpose. Okay, so our chapter set off and carry forward comes to an end. If you want, you can solve this question number 3, very simple question on page number 6.20. I don't want to waste time. Okay, you all can solve it on your own, because if I solve this question, it will at least take 20 minutes, and if you solve it, it will take 5 minutes, because I have to also explain while solving the sum. I can't simply put the figure. Okay, so simply I want you all to solve this question, and do not solve any question from this chapter, because any which ways, when we will be studying different heads of income, that time set off and carry forward will be part of that chapters also. So that time you will revise it any which ways, and after studying heads of total income, you come to this chapter and solve other sums also, because there are some questions asked in this particular chapter that are part of heads of total income. Okay, I would like to request to the students who are new to this channel to subscribe to this channel, and the students who are already subscribed to this channel and who are also new to this channel, kindly hit a like button to all my videos whichever you are viewing. This will help YouTube to recognize that this particular lectures are good enough, and it will push it to the maximum audience as much as possible. And I would also request you all to share the video lectures, the playlist of my video lectures, to all of your friends who are connected with this CA course. Above here you can see a mobile number besides the UPI apps. So what is this? So basically, earlier when I used to teach on YouTube for free of cost, few students used to contact me and used to tell me that, sir, I want to appreciate you in a monetary terms, please give us your account number so that we can make a monetary contribution to you. So that time I wasn't sure to give them my account details, and that time the UPI apps were also not so much in popular, so that's why they were safe or not, that was also a concern. But after this COVID and the lockdown, the UPI is being commonly used by everyone. So if you want to make a monetary contribution to me, you can make it over here. And I would also request you all, if you are making any monetary contribution to me, please send me a screenshot of that so that I can recognize who have made a monetary contribution to me, and I can appreciate them on my social media handles over here, including the YouTube, in my video lectures. And whatever the contribution you are making to this UPI number, it is at your will. There is nothing dramatic about that you have to make a contribution to me. The video lectures are completely free, as well as the notes, and the format book is also free. You can download it from the Telegram group. Just you need to do is you need to join the Telegram group, and from there you can download it. I hope you all make the full use of the video lectures and the direct text playlist along with the notes as well as the format book, and secure an exemption in CA IPC Paper-4 taxation. And I would like to wish you all the best for your future.